Hey everybody, I wanted to take this second to do a little update from my video yesterday. Yesterday I talked about the stimulus package and the PPP loans, and there was one part of the new legislation that I didn't talk about that could be a pretty big deal. So I wanted to talk about that today, and that's the employee retention credit. So let's talk about that a little bit. So if you remember back when in March when things first got crazy, when they announced the PPP loan, there was also another possible uh, credit you could take if you had employees that you continued to pay. It was called the Employee Retention Credit, and basically it allowed you to take a credit of up to 50% of the wages you paid to employees during any period when you were shut down or had reduced revenues. And that credit was taken on your payroll tax return. And basically, it was offset of payroll taxes that you paid. And I would say that most people did not take advantage of this, mostly because you could not take the credit and also get a PPP loan. So most people chose the PPP loan route. So I know very few people that actually did the employee retention credit. There were a few, but there have been some updates to it, and I want to go over those updates right now and tell you why it's important. So here are the updates. So as I mentioned, there was certain rules about if you were eligible to take the credit, and basically the rules stated that the wages you paid had to be in an eligible quarter. An eligible quarter was defined as either a quarter where you were shut down due to COVID restrictions or a quarter where you had a 50% or more decline in revenue. So for most people, that was easily done during most of 2020, but they have updated the rules now. It's an eligible quarter can be any quarter that you had suspended operations or any quarter that you had a 20% or more decline in revenue. So that 50% was reduced down to 20%. So a lot more people can qualify for the credit. The other thing that was part of the credit is that the credit was calculated as 50% of any wages that you paid during that period, that quarter. And that's now 70% instead of 50%. So it's a much higher number, as you can see. And the other thing that was updated in the first round, those wages were capped at $10,000 per employee. So in essence, the credit was capped at $5,000 per employee. But now that cap of $10,000 in wages is a per quarter number rather than a overall number. So you can pay an employee $10,000 every quarter and continue to get this credit as long as you still qualify for the credit. So if you have just a few employees that make more money, it can be a much more valuable credit now. And the very last thing that's probably the most important thing is that you can now take the credit even if you got a PPP loan. So that's going to be huge. That means that almost anybody who has employees who had any kind of reduction in revenue will want to take a look at the employee retention credit. So I want to mention a couple of things about how this works if you did get the PPP loan and want to take this credit. So you can't double dip, so you can't take the credit on any wages that you paid with PPP money, assuming that you're going to ask for forgiveness. So you had that 8 or 24-week period where you were paying wages with PPP money. You can't take the employee retention credit during that time. But there was a point, it's different for everybody, but there was a point when those PPP money ran out for you and you started paying employees out of your own funds rather than the PPP money. That'll be the time when you can start taking the employee retention credit. So for a lot of you, that means maybe it was the third quarter, maybe it was the fourth quarter, maybe it was even the second quarter of 2020, where you stopped using PPP funds to pay for employees. That's the point when you can start taking the employee retention credit. So that might mean going back and amending your payroll tax returns if those have already been filed. So you'll want to run the numbers yourself and talk to your payroll provider and see what the process is for getting this credit and possibly amending payroll tax returns. And like I said, for anybody who was either shut down partially or in full, or who had a reduction in revenue of 20% or more, you'll definitely want to take a look at this. With the new round of PPP, obviously, if you decide to take the new loan, then you'll have to stop taking the credit while you use that PPP money, but then you can potentially turn it back on after those funds run out. Or you can decide, possibly, if you run the numbers, just not to take the next round of PPP if the credit is worth more to you. And for some, it might be. So you'll have to run the numbers yourself and see how your payroll stacks out and whether or not the credit is worth more. Like I said, now you can do both, so you're not stuck if you choose one, but you do have to keep better track of which money is going where. So just wanted to point that out. Another new thing, the legislation has been signed. The expectation is they've given the SBA 10 days to write all the rules. I doubt that they'll meet that deadline, but should be 2 weeks, I would guess. Should start hearing more information so we can get that out to you. Thanks a lot.